Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it first time in decades because what just happened with this quarter that just ended is the first time in many, many decades, and we're going to talk about it. And, I think we're hearing a lot of these kinds of things, right? First time in 40 years, first time since 1970s, first time since the 30s. I mean, it's just a lot of this kind of thing going on, and it tells you that something is changing in terms of major shift going on. All right, we're going to start off. We're going to focus on the Dow Industrials and the Russell 2000 ETF, IWM today. Look at a couple of key indicators that we look at every day. And then I want to do some interesting comparisons between Apple, Amazon, Google, and Microsoft. Well, let's start off here with the side-by-side between the Dow, the S&P, and the Nasdaq. What I'm showing is the monthly view, right? So the Dow is down a whopping 2,785 points for the month of September. The S&P down 369, and the Nasdaq Composite down 1,240 points. Now, didn't close below all the trading here on the Nasdaq, but these other two did. I mean, clearly, and closing almost on the low of the month and low of the week. And speaking of week, let's go back and take a look at the weekly view in here. Okay, here's the weekly view side by side. So the Dow was down, let me look at my numbers, down 864 points for the week, and it's coming right into this gap. There's a gap that was created in November of 2020. We haven't really closed that gap completely yet, but we're getting there. Could do it just in the first few minutes on Monday, maybe. But 2 weeks in a row below a 200-week moving average, and a lot of folks keep an eye on that. That doesn't happen very often. The S&P 500 is about 7 points below the 200-week moving average, and it was down 108 points on the week. Well, you can see that right here. Sometimes it's not very clear, but 108 points. And, again, here's the percentage moves from intra-week high to intra-week low, 25.6%, 22.3% on the Dow. And over here on the Nasdaq, where the high occurred back in November, we're still holding that June low, but just barely. We're just a couple of points off of it. In here, and it was down 292 points this last week. So again, 2 weeks below the 200-week moving average, just like the Dow. Okay, let's drill in and take a look at the Dow. Well, before I do that, let's look at the side-by-side on the Dow and the Transports. So these two are in sync now, okay? Again, they're both going to lower lows together. Look how we've got 2 weeks below the 200-week moving average, just like on the Dow. This is basically confirming the classic Dow theory of a bear market, when these two are in sync, okay? Transports, it just makes sense, right? Because transports transport the goods that need to be sold by the industrials, is the old classic view of how everything works, and people still look to this. And the transports are sitting there at 2 weeks below that 200-week moving average, down 34.5% from interweek high to interweek low. What happened this week? Do you remember? Week of October 31st, one of the rental car companies announced they were going to have electric vehicles in their fleet, and the crazies spiked it like crazy. Like there was no tomorrow, and that pretty much put in the high at 18,246.51. Okay, let's go back and take a look at the Dow. So here's, let's see, I want this. I don't want to go to the Dow. I'll go to the Elliott Wave picture here in just a second. Let's just show the moving average. So here's the weekly, here's the daily. Here's that gap that I talked about that we came down in. We're down 500 points on Friday, but we're getting a little bit of divergence showing up on the RSI, as well as DI minus, not confirming the new thrust to the downside. So we may be in for a little pause, and that's what I'm going to look at. Now, in the Elliott Wave picture, this is how I'm looking at it. We've got this high back here in January, and I believe we are in the in terms of the wave structure to the downside, we are in intermediate wave 3 to the downside and minor wave 3 within intermediate wave 3. Now, I am going to lean into the aggressive side down in terms of the wave structure because of the way we are coming off completed wave highs here in January. This completes 5 waves up from March of 2009, 5 waves up from August of 1982, and 5 waves up from July of 1932. And it may actually complete 5 waves up from 1789. Okay, so we're talking about a top in the market that is of multiple degrees of trend. So we're talking about a significant top in here. So yeah, I'm going to lean into the strong move to the downside. So let's take a look. Where are we within minor wave 3? Well, I think we just had 5 waves that completed here on the 27th, which, what was that, Tuesday, to the downside. And this, I'm looking at the hourly, the 130-minute view. So what did we get? We got a little bounce in here on Wednesday, and then we sold back off again. So on the 130-minute view, it cuts the day, the 6.5-hour trading day, which I wish they'd change that, but it cuts it into 3 equal bars of 130 minutes each. Okay, and so there's, nice. I like doing that with 195-minute 2 bars, 130-minute 3 bars. And so this is either minute wave 2, which I don't really like because it's very, very shallow. It's only 23.6% to getting into that high there. And then you come down, and we've only got 3 waves so far. Now that may change. If we continue to sell off on Monday, Tuesday, then okay, something's changing. We'll be looking for a 5-wave structure to the downside. But as of right now, we're getting pretty significant RSI divergence, very similar to what happened over here at the beginning of September before we got our little bounce. And I'm talking about this was just a little bounce. It was just a couple of days, like 3 days or so, 3 to 4 days. So what are we going to get in here? It looks like we could be in for a little bounce. And to me, that's going to put us at wave 2. So the real question is, does wave 2 bounce up to 38.2% retrace or 50%? What's it going to do? So somewhere in this range is what I'm looking for. The alternate is it's already in. Well, we'll find out on Monday, Tuesday. Okay, so I'm kind of leaning into this. That's why I've got it as the preferred count. I think it fits a little bit better, but I'm not talking about a huge bounce, and it could set us up to establish some really nice short positions again. So that is where we're at with the Dow Industrials. Let's take a look at the Russell 2000 IWM. Okay, here's the Russell 2000 ETF, IWM. Now notice on the weekly view over here, it came down and got below that 200 week back in June pretty well. I mean, several weeks in a row in here, like 5 weeks, right? 5 weeks in a row, bounced back up with that rally into August. Now we're back down, we're below it again. And it was down 239 for the week. And then over here on Friday, it was down $1.21. Okay, so here's the picture on the daily view. And when we look at the Elliott Wave picture, it's very similar to what we've got on the other indices. And so we're coming off the high that occurred back in November. So this peaked around the same time that the NASDAQ did. Okay, and so now we've had intermediate wave 1, intermediate wave 2, and just like I've got on the Dow, the S&P, the NASDAQ, we're in minor 3 to the downside. And a little bit different picture when you start looking underneath the covers and looking at the 130-minute, mainly because this wave that came down in here, the B wave, didn't go to a new low. It didn't go below the September 27th price action. Okay, so right now this is not totally clear. It's a little bit confusing in here. Is C wave may, if it continues to push higher, The C wave may end up being some kind of little ending diagonal or something. It's hard to know for sure right now. But I'm going to play out and say, okay, I think maybe we have a little bit more to go to the upside. And the alternate is the same thing that wave 2 is in. Now, again, in terms of what did it actually do already, got a little bit stronger in terms of the pullback of 23.6%. Not quite to 38.2. These are the targets that I'm typically looking for on a retracement, especially on wave 2. So we'll see. Again, we'll see what happens on Monday, Tuesday, but these are the alternate paths that I'm looking at, and my preferred says, I think maybe we have a little bit more to go in here. Okay, so that's the picture with the Russell 2000. Okay, now I want to talk about, let me go back. Let's just go back to the moving average view. I want to talk about that theme of this video, the first time in decades. Let me pull up a slide here. Quarter to forget. This is from a Bloomberg article that came out on Friday, and the source is Bloomberg. First time in decades, the S&P 500 index never closed negative after strong gains since 1938. Well, it's kind of interesting. So they're saying it happened in 1938, but not surprised if maybe it happened in 29, 30, 31, 30, whatever, prior to 1938. But what they're saying is a big reversal. The first quarter that the S&P 500 closed in the red after it gained more than 10%. So here's how all the gains that they're talking about, and then look how it was down 4.3%. This has never happened since 1938. So that is a long, long time, and that's back into what I label as wave 2, cycle wave 2, within super cycle 5 coming off of July 1932. So we'll see what happens, but when you talk about things that are occurring that haven't occurred in, 80, 90 years, we're talking about pretty significant events. Okay, let's take a look at a couple of indicators. So let's start off with the VIX. And I'm just going to go over here. I'm going to focus on the daily for now. So here's what's going on with the daily view. We're sitting at 31.62, down 0.22 on Friday. Just a lot of oscillation, and just ends up with a little doji type candle in here. But here's what everybody's watching. Everybody's watching this 3,500 level, right? Everybody's watching the 3,500 level, especially since back here in December, January, March, April, June, and then we just had it where we got very, very close, 34.88, and then it sells back down. So if we get the bounce that I'm talking about in the indices, if we kind of get a little bit of a bounce and we chop around in here, but here's what I've got my eye on. We break that trend line right above that, which to me, we get a close above something like 37.5, 38. I think we are going to be in explosive mode in here, because we've got a pretty big kind of a rounding type bottom going on in here when you look at the weekly view. So it's going to be interesting to see after a couple of days this week, what do we get? Okay, so that's where we're sitting with the VIX, because we've really come on strong in here, as you would imagine, with the market. Now, what's going on with the McClellan Oscillator? Let's take a look at that. Here's how stretched we got on the McClellan Oscillator. If you look around over here, minus 419. There were only 2 readings greater than minus 400. Let me just level set this for a minute. This is the 0 line. Minus 150 is extremely oversold. You can see these conditions. Here's what happened at the beginning of September, okay? Then it's like stretching a rubber band, and all of a sudden then it releases, the tension comes all the way up and it relieves itself, then boom, pulling the rubber band again. Minus 419. There's 2 readings greater than 400. This is 400. This is like 350, or I don't know, maybe it's 200. I lose track in here. All I know is this is 200 and this is 300. 400, 300, 200, 100, 0. Okay, so 100-point increments in here. You just don't get down here very often. But here's the other thing. When you look at the summation index, this is the cumulative of the McClellan Oscillator. Look how we basically have fallen off a cliff since mid-August. Look how rapid the descent. Very similar to what happened over here in 2020, January into the bottom in March of 2020. Right now, this indicator has gone to the lowest low of the year. It's gone below the May readings. And only a few days back over here in March 2020 are lower readings. So this has really indicated, yeah, we are in heavy duty sell mode. Okay, so that's what the McClellan Oscillator is telling us. Let's take a look at a couple of these big high-tech stocks. Okay, everybody loves Apple. I got a lot of Apple products, 6 or 7 of them. I love the Apple products. But I think this stock is getting ready to come down, and it's coming down hard right now. Now, you notice how we had this really big bounce? I talked about this in a video many weeks ago where I was comparing the type of counter trend rally that occurred back in 2008. And this basically almost duplicated the kind of counter trend rally that happened in early of 2008, 80% plus retracement of the move down from the high to the low here in June. Well, we're coming down pretty quick. It was down $12.23 here on Apple. I just don't think it's going to escape, the sell-off. And so here's the June lows. We haven't broke below the June lows yet, so I'm kind of watching that. And here's the March 2020 lows. Now, it's quite a ways away, $53.15. We closed at 138.20. The aftermarket took it down a little bit more on Friday. So what about, let's see, what about Amazon? Okay, what is it doing? Well, Amazon's a little bit similar to Apple, similar in that we're getting, we're still above the June lows. We haven't taken it out, but we are on the way. Didn't get nearly as big a bounce as Apple got, and we're a heck of a lot closer to taking out the March 2020 low at 81.30. Now, what about Google? Google is below the June lows. So all of a sudden, these big boys, the big tech stocks that are driving the S&P 500 and the Nasdaq 100, yeah, they're getting hit. Nobody is going to be immune from this. And here's the March 2020 low of 50.44. And then the last one I want to take a look at is Microsoft. So Microsoft also has taken out the June lows. Now, it doesn't look super dramatic at this point, but it has taken out the June lows. So 2 of these 4 have. Amazon's getting closer, and here's the March 2020 low, 132.52. So we'll see how long does it take Amazon and Apple to take out the June lows, and where do we go from there? But that is the picture at the moment. And I just don't think, I think they're all going to be in sync, and I don't think they're going to be immune from what's going on with the overall market. All right, that's it for this video. If you felt like the video was helpful, give it a thumbs up. If you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, head over to joehenches.net. Check out the website, check out the membership. Everyone have a great week. We'll talk to you on the next video.